Hey, Jeremy Hood here, founder of Restaurant Results Partners. And for those of you that don't know, we help restaurants make more money by helping increasing your sales as well as increasing your profits. And just wanted to make a quick video today. I was having a conversation with a new customer. He mentioned he might not be getting as much detail as he should from his P&L, from his bookkeeper. So I thought it might be a cool idea to kind of walk through how we look at P&Ls. And I am a licensed CPA in the state of Florida, so I know I'm a little bit biased, but I promise you it's not super complicated. I'm going to walk you through everything you need to do today to make better decisions in how you operate your restaurant. So first off, if you're not super familiar with the P&L, there's a book out there called The Great Game of Business, and they're really big on educating even their employees how to read financial statements. And I liked the way they describe the balance sheet and the financial statement. Basically, they say the balance sheet is your overall report card for the health of your business, and the P&L is kind of like a temperature check to see what symptoms there might be that are causing your health to either improve or deteriorate. So essentially, your P&L is where you're going to look at your sales, your cost of goods sold, all your other expenses, net profit, and I'm going to walk you through, like I said, how we format our P&Ls so that you can make better decisions with your restaurant. So let's just jump right in. We like to use QuickBooks Online. There's tons of different accounting softwares out there. QuickBooks Online makes it super easy for multiple people to work on your account. Like if you have a bookkeeper doing it, or if maybe you have one of your employees helping you out, and you have access anywhere you go. It's all online. You can pull it up on your phone. You can pull it up on any computer. And there's lots of automation that happens here as well when you sync your bank account. So it makes it super easy to maintain accurate books, and that doesn't take a lot of time. So if you open your P&L, if you go to the report list, standard P&L is probably going to look like this. This is one of our accounts. This is going to do year to date probably by default. So the first thing I'm going to do is change this to last month. And if you're using QuickBooks Online, I'm going to show you how you can do all this inside of QuickBooks, but I'm also going to export this and format it in Google Sheets, just in case you don't have access to QuickBooks Online, or maybe you're getting your P&L in an Excel format. So you can do all this in Google Sheets as well. It takes about 10 minutes to set up, but it's well worth the time. So from here, and let me just talk about this example as well. So let me collapse it so it's easier to see. As you can see, as you know, restaurants, food and labor are your two biggest costs. We actually had to create this account for labor costs because by default, you can't just create a restaurant P&L in QuickBooks. So you can see down here, our payroll expenses are 0, but that's by default where all of the paychecks go. And then we have to use a journal entry to move them up here. But just to kind of show you what I mean, you can see all of those expenses for labor are right here. And then we're going to zero it out into the account that we want to see, so that we can make better decisions, and we can get a quick glance at food and labor costs. All right, so for example purposes, I'm just going to export this really quick as it is to Excel. And now we're going to do April of 23 because we want to always look at last year. And I'll talk about that in a second. So we're going to export this as well. And then we are going to also look at March of this year as well. So you're going to have two comparisons, to last year and to last month. That didn't save. One more try. Feel free to pause this video whenever you want, get your own P&L ready, work along with me. That's what it's meant for. So I'm going to export this. All right, so now I've got 3 P&Ls that we're going to use in this Google Sheet over here. But if you are fortunate enough to be using QuickBooks Online and your last month is ready to go, we're going to just change this back to last month. And now we're going to add 2 well, three comparisons really. We always want to see percent of income. That's going to give you your percentages, cost of, like, food costs, labor costs, and then we're going to do previous year, percent change, previous period, percent change. So once you click that and click run, all right, now we've got some data to work with. So I'll leave that here, and we're going to build the same thing in Google Sheets with those ones that we exported. So they've exported as Excel files, but you can also import CSV, or you can even copy and paste in here. Importing is usually the easiest thing to do. So I'm gonna click on File, Import, and we will click on that first one. And just go ahead and click on, well, I was gonna say replace data at selected cell. I think that's only available with CSV, so just go ahead and click on Insert New Sheet. And we're going to do that 2 more times. So that should be April of 23. And you can see it's April 23. And let's put in March of 24. All right, so from here, we just need to do a little copying and pasting. All right, so just gonna go ahead and copy these. You don't need this last line down here. And let's give it 2 columns of space. And you can double click right there at the edge of each column, and it'll kind of space it out how it needs to be. And then let's grab March as well. All right, the first thing you want to do, and this happens sometimes, is sometimes there's expenses in different months that aren't in the current month. So you can see the net income line is not lining up. So we need to go down line by line and add cells where we need to get this formatted a little bit correctly. So usually it's not in the top income or cost of goods sold line. It's usually as you get down into the expenses. So I'm going to do a couple of these, and then I'll probably just pause the video while I clean up the rest of the sheet. So you can see advertising, auto, bank, delivery, laundry. Okay, so right here you can see music and cable, and then the other ones are licenses and permits. So we want to move this down to the lowest, music and cable. So there's a couple expenses here that aren't matching up. So you want to make sure you highlight as many rows down as you need to go, and then you're going to right click, insert cells, shift down. So now these 2 line up, this one's still off, so we're going to move this one down. All right. So now we got paper, it's not lining up. Shift down, shift down. Pest control. All right. Rentals, repairs, security, small tools. All right, so that looks good. And then there was apparently no other income last year in March, so I'm going to move this down. Delete this row that we don't need. All right, so now we've got all of the net income lines on the same. So from here, we're going to add some formulas to do the comparison. So the first thing we want to do is percent of income on just the current month. So we're going to do an equal sign, and then click on the cell that we're working on, divided by, we always want to divide by the total sales. That's going to give you the number that you're looking for. And since we want to use that number for everything, I'm just going to put a $ sign in front of the B in front of the 9 and click enter. And you could click this if you want to. I'm just gonna drag it all the way down, and then you can delete the rows that it shouldn't be there. And we will format this to %. All right, so now that's giving you your % of income. So you can see food costs, labor costs, cost of everything else, about a 4% net income. Now we want to compare how this changed to April of last year. So we're going to do an equal sign and then current month minus last year divided by last year, but we need to add parentheses here so the order of operations is correct. And you can see that worked out. So again, I'm going to drag this down. Where there's blanks, there's going to give you some errors. You can just delete those. Cool. And now we're going to do the same thing for last month. So we're going to do equal sign again. Current month minus last month divided by last month. Add parentheses. Oop. And again, feel free to pause this whenever you like, follow along. I'm gonna leave a copy of this publicly, so if you want a copy, you can just let me know. You can copy these formulas, make it a little bit easier for you. Let's change this to a %. Again, drag this all the way down, delete the errors. So now we've essentially have the same sheet in Google Sheets as we do in QuickBooks Online, in case you're not using QuickBooks Online. So from here, again, if you wanted to make this super easy to look at, you can highlight these percentages and we can do conditional formatting. And let's say you want to highlight, well, let's change this. Let's just highlight the comparison periods, and let's really focus on the expenses because there's a lot of those and there's only a handful of income and cost of goods line. So let's say you want to quickly see everything that went up by more than 20%. So you're going to say greater than 0.2. And we're going to say that's not good, so let's make it red. So you can even click on this little paintbrush right here. It's going to copy that format, and then we can do the same thing right here. And then let's say you want to also look at anything that dropped less than 20%. So we're going to highlight the same cells, add another rule, less than minus 0.2, and we'll say that's good, so we'll leave it at green. Again, we'll click that paintbrush and highlight all of these. All right, so I know that took a few minutes, but in my opinion, this is worth it. Can you imagine if you got a P&L like this every month for your bookkeeper, if you'd be able to make some quick decisions and 2 better decisions on how you operate your business. So from here, it's just about looking at the numbers and seeing what they tell you, and you should be looking at your P&L monthly. I know there's a lot of restaurant owners that don't even look at this for months. They don't even produce P&Ls for the whole year until the end of the year. However, how can you run your business like that? I can promise you, all these corporate restaurants, chains, they are looking at these numbers probably weekly, if not daily, to make decisions. And, us independents, there's no reason we can't stay on top of this either. So from here, the first thing that you're going to look at is sales. Obviously, everyone wants to see great sales number. So comparing you know, year over year isn't, there's some pros and cons to both comparisons. So that's why you want to look at last year and last month. Last year, weather, could be a big thing, different events that may or may not have been in and around your restaurant. There's a number of factors that can really cause large fluctuations in year over year sales comparisons. However, you still want to look at it. So here, we can see catering, dining room sales were down a little bit. Catering sales were up a good bit. So, sales were down just slightly at 1.37%. So, you want to look at that number and think about, okay, well, like, why are the dining room sales down? And, we know just in general where the economy is at right now, middle and lower income consumers are pulling back. And, this restaurant has a lower average ticket. So, the dining room traffic is definitely down for sure. However, catering, companies are still spending money, on their employees and stuff like that. So, that's why the catering sales are up a good bit as well. Also, I know some of their events that they used to have pre-COVID are starting to, like, more of those are coming back now. So then looking at last month, this just helps see where your current trend is at. So, you want to look and see, do these numbers make sense? Well, dining room sales are down almost 3%. So if you think about it, well, April has 2 less days in it this year than March did. And there's also more weekend days in March. So, if dining room sales are staying consistent, but there's less days, less weekend days, it makes sense that the sales are down a little bit. Catering was up even more compared to March. This makes sense as well. There's graduations, more weddings in April. So, liking what we're seeing so far. And then, from there, food and labor obviously are the two big ones that we need to control. Industry standards 60 to 65%, depending on what type of concept you're working on. So when we're looking at those, obviously, labor is a lot higher than we'd like to see it here. But I know labor has been challenging across the country lately. Everyone's minimum wage is going up. Everyone's asking for more raises. One person finds out this person got a raise, so then they ask for a raise. So that's kind of to be expected. Obviously, like, we need to work on that. And then, food costs. So I know for this account, paper, their food cost includes paper. Their vendors stopped breaking out the paper products on their invoices. So historically, paper is around 4 or 5%. So their food cost is probably closer to like 30, 31%, which is fine for this restaurant. As you can see, it's still a good bit up compared to, compared to last year. It's still up about 8%. And really, when we're looking at these comparisons for the costs, anything that fluctuates with your sales, you want to see that follow the same trend as your sales. So since the sales were down a little bit, we should have seen the cost of goods, the food costs come down a little bit as well. But as you know, inflation, it's been going crazy for like 2 or 3 years now. And, you can only raise your prices so much before that also starts affecting your traffic, which we're kind of seeing here. So we're sort of in a holding pattern here. Labor was way higher last year. I know that they paid out some bonuses. They tried some experiments last year that didn't work out. As you can see, lost a little bit of money. But comparing that to March, so looking at March on food costs, sales were up 4%. Ideally, we want to see the food costs be up less than 4%. They're up 25%. So anytime the expense is growing or declining faster than the sales, that means the cost of goods went up. So they probably had a better food cost in March. And if you do the math here, you see it was closer to 29%. So maybe some inventory didn't get coded properly, some of that fluctuation there. Labor, it's kind of right on line where we want to see it compared to March. So sales are up a little bit, labor's up a little bit. So this is why it's always good to look at last year and last month. You want to make sure that your current trends are in line, but then obviously, like if you can have some big wins against last year, we'll take those as well. So from there, obviously you can nickel and dime your way saving money on all these other expenses, but you focusing on your food and labor is where you're really going to see big gains at the bottom line. I mean, for this restaurant, every 1% they can save on food or labor is an extra $1,500 at the bottom line. And really, when you think of that, you need to break it down into the smallest chunk possible. So let's say there was 12 trucks that they got delivered in April. So that's about $4,000 per truck. So, if you wanted to save $1,500, you just spend $125 less per truck. I mean, that's not that hard, right? Like skip ordering something until the next one. So if you can break it down to the smallest increment, it really doesn't look as intimidating to try to be more profitable. Same with labor. I don't know how many labor hours they had, but maybe they just need to cut back like 6 hours a day on labor to save a % or two. Now, getting into these other expenses. So with the % of income, let me just label these. The % of income line is going to tell you, your true cost expense as a percentage of total sales. This is good, for comparing to industry standards. So we already know food and labor, advertising should be like under 3 to 5%. And a lot of people say rent should be like under 8%. So these are going to give you some good numbers to just compare how you're doing as a restaurant in general. But then the % change is going to give you more data on, how can you tweak things in your operation to improve those numbers, these percentages. So 4%, not bad. It's better than losing money like they did last year, but it's nowhere near what they made in March. And again, some of that might be labor expense paid in April that was probably for some of those sales produced in March. And, maybe there was some fluctuation in inventory. So still not a bad 2 months when you look at the two combined, about 26,000 on about $300,000 of sales. So almost 10%, not too bad. Obviously, like I said, last year they were testing out some bonus structures that didn't quite work out. So they lost a little bit of money. But from here, you want to look at the % change, and if you need to drill down into a number, just drill it down into that count and see what's going on. So, I know last year they were spending some money on some things that weren't really producing anything, like print advertising and stuff like that. Seeing some better results recently from the digital marketing that we help with. So they've increased their ad spend there. So that makes sense. Automobiles expense was up a good bit, especially from March. There's probably a repair in there. So if I come in here and open up that account. So again, the benefit of using QuickBooks Online, you can drill down into any account as you're looking at this. It's taking just a second to load. So normal, gas charges right here, and then there's a big repair right there. So that's to be expected. It happens sometimes. So kind of going down. If you're curious, they actually do cash discount on their pricing. So merchant services normally would be 2% of your sales with credit card fees. So they're actually using a cash discount. Probably would have been normally like $3,000 to $4,000, but because they're doing that, that saves them a ton of money there. Highly recommend for especially local independent restaurants to look into that. Delivery commissions would be like third-party delivery apps, Uber, DoorDash. Looking at cash short was a little bit higher this month, so they probably want to look into that. Dues and subscriptions, they're paying some more for a little bit more software, so that makes sense. And so as you can see, like I'm just going down line by line, looking to see, does it make sense? This is higher or lower than last year or last month, and if we don't like what we see, like how can we improve that? So let me see if anything else jumps out at me. Rent increases. So again, like I said earlier with food and labor, anything that fluctuates with your sales, paper, this is a barbecue place, so wood, utilities, kind of. I mean, you have to turn the lights on whether your hours are open, so that's not really going to fluctuate too much with your sales. Rentals, this is for weddings. There's probably like a refund there. So anything that fluctuates with your sales, you want to see that following the trend of your sales. Other things like rent, insurance, I mean, those should be pretty consistent. So you just want to make sure that everything's recorded properly. But again, just going down the line, how can we get better at these? What makes sense, what doesn't make sense. So hopefully this was helpful. And highly encourage you, if you're not looking at your P&L like this, to do it next month. See if you can make some better decisions. And really, with in QuickBooks you can create almost as many accounts as you'll need. I think you can create up to 250 accounts with the basic plan, which should be plenty. As you can see, there's probably like 40 or 50 here, but I don't even have this expanded. When you expand it out, you can break your food costs into different categories. We've got different categories for advertising, insurance. So you can really add as much detail as you want. And again, the more detail you have, the better decisions you can make, and which should lead to a more profitable restaurant. So hopefully that was helpful. If it was, give me a like down below. And I'm going to, like I said, lead this Google Sheet publicly. And we can view it. So you can make a copy of it, or you can just come in here and copy the formulas. And if you'd like a copy, just go ahead and head to our website, restaurantresults.co. Click on this little chat bubble right here. And go ahead and click on this menu bar and click on subscribe to newsletters. It'll ask for your name and email. And then after you give us the best email to send that to you, just send a quick note that you want the P&L comparison worksheet, and we'll send that over to you. That's it, and thanks for watching.